This is Don DeBartolo, a senior commodity broker and market strategist with Daniels Trading in Chicago. I'm also the trader behind the Trade Spotlight advisory service. This advisory service is broken into three segments, cover the futures, options, and future spreads. This is Beyond the Spotlight, a video that will spotlight two or three markets that may become trading opportunities for this week. This week begins with Monday, April 19th, 2021. Please pause the video and read the disclosures to understand the risks involved with futures and commodity options trading. Okay, jumping right into our first chart. This is the June 2021 30-year Treasury Bonds. This has been a chart that's showed up many times lately in the Beyond the Spotlight video because I've been watching this inverted head and shoulders formation. So picture someone standing on their head. This is the head of the formation, the 12-month contract low. That was made on March 18th at 153.07. Then over here you have the left shoulder, and recently the right shoulder was put in along this 20-day moving average. You can see on Friday, this was Thursday, we had that breakout bar. And didn't take a trade yet there because I wanted to take the longer term approach on this market. You know, you could have bought on a break of these highs here, but you can see then Friday pulled right back. What I want to do now that the position is established is go long on a break of this horizontal line. So that high right there, I'll get that for you, is 159.01 from the 15th of April, so last week. So perhaps this week I will have an order to buy on a break of that high. But first, I do want to see my momentum indicator. This is a stochastics. I want to see the momentum hook back down and then begin to roll up. That's when I'll put it in the order to go long. The trend is up. This is my MACD indicator. And you have a 20-day moving average pointed up, though a 50-day moving average is pointing up. If these two moving averages converge and cross over, though, that is a bullish signal. But we would need the 50-day to really come down for that to occur. May look at this opportunity for options too. And so we can kind of jump the gun, if you will, to get long this market using call options or a call spread. That might be something I look to do this week. Upside target is just about that 164.5, 165 price level. So maybe a call spread up in here, 161, 162, up to 164, 165. So keep an eye out for the June 2021 30-year bond trade idea, whether it's futures or options. The next chart is a spread chart. This is the July 21, November 21 soybeans spread chart. And this is a trade recommendation that was sent out last week via the Trade Spotlight that was filled on Friday. But I wanted to show this chart again because there's still, I think, an opportunity to get into this spread, whether you're buying it where I did last week or perhaps on a pullback back to the lower trend line here. So let's break it down. I went long on a break of this pivot point high at 147 cents. So you see Friday we settled at 148.5. So if there's a pullback on Monday or just buy it Monday to get long this spread, because my overall target is up in here at 193 cents, a potential profit of $2,300. My stop loss is working below these lows at 126 cents. That's an initial risk of 1,050. As the market moves higher, I will trail the stop loss up below these lows. There may be some congestion area near this 20-day and 50-day moving average, but I'm looking overall for the market to get back up to the top of the channel or these recent highs up in here, just short of the 200 cents level. There is a seasonal strategy to be long this spread, and I like trading a spread in soybeans because of the risk and volatility in the underlying futures market. A spread gives us an opportunity to lower that risk, lower that margin requirement. The margin for this spread is $1,800. You can see my MACD indicator. This is a trend indicator, is about to turn up. And this is my stochastics. You can see that the market was oversold and now is turning up and is about to break through this level here. So a lot of good things pointed up for this spread. So I am long at this juncture, and you can too. If you have any questions on this or don't have that email, I'll put up all my contact information at the end like I always do, so you can reach out to learn more about the spread. And the third and final chart is the June 2021 live cattle. This has been a market that's been on beyond the spotlight for a while now as well. I talked about a break of this lower trend line triggers an entry to the downside. I did not take the trade officially. I hope that some of you out there watching the video did, because you can see we had quite a nice sell-off here in the market. This was a chart from Friday. It looks like Monday we even sold off a little bit more in the live cattle. But again, I'm taking kind of a longer term approach. I do want to be short this market, but I'm waiting for a potential head and shoulders formation, the reverse of the 30-year bond. This is someone standing upright. You've got the head here, the 12-month contract high. That high is 125.62 from April 8th. We put in this left shoulder here, and I'm looking for the market to trade back into this level around the high that is the left shoulder, which is 122.40 from the 16th of February. And then when the market hooks down, then I'll take a short trade. So you can see the trend is down. Here's the MACD indicator. But my stochastics is showing an oversold market. And that's why I paused by not taking any short trades, up in here at all. I'm waiting for the MACD to, I'm waiting for the stochastic to hook back up and then hook down, showing downside momentum. So it's a little bit more of a conservative approach, and I missed a trade, but more often than not, you'll take a trade that, or you won't take a trade that won't go anywhere because there isn't momentum. So just kind of taking the longer term approach on this one. So looking for the market to hook back up into this level, and then waiting for the momentum to hook back over to take a short entry. Downside target is going to be about these lows here. That lowest low is 116.42 half. So let's keep this market on your radar, or if you're already short, well done. Just keep trailing that stop loss because the momentum is showing that it's potentially oversold. Here's a look at what the trade spotlight looks like. It's an email service directly into your inbox. You get the timestamp when the trade came out. Here's the soybean spread, right up of the trade, the precise entry order, precise stop and targets, risk reward parameters going into a trade, any important information like margin requirement, and a chart that you can click to view my indicators and my trend lines and all that good stuff. If you're not following the Trade Spotlight, I encourage you to do so. I provide a free 90-day trial offer. Just go to danielstrading.com, click on advisories, and then under the technical analysis category, you'll find Trade Spotlight, where you can read more, you can see recent posts, and click the button to subscribe. Otherwise, it is a free service that I provide to clients of mine in the firm. Here's all my contact information if you have any questions on the charts I covered today, the trades I'm in, or just the markets in general. Thank you for taking the time to watch and listen, and happy trading.